Okay, recording this video after close of trade Friday, 12th of August 2011. Hope you had a good week's trading. Extreme volatility, but we ended up on Friday with actually what was a normal type of day. We had about 2.1 million contracts traded. Top to bottom, I'd know, was about 18-20 points or something like that. You know, quite different from what we've had over the last 2 weeks, but that's what we kind of normally get. And it's been kind of pretty epic the last 2 weeks. This is the waterfall decline that started off 2 weeks ago, and then basically this week we ended up where we started. So this was the last Friday's bar, and then the last Monday, Tuesday, Wednesday, Thursday activity with this extreme kind of volatility here. We basically ended up kind of where we started the week. But I think we're going to test down. I don't think the bottom is in. I know that bottoms are made a lot quicker than tops. Tops tend to take a lot of time to kind of test and get no demands and patterns and so on at tops, but bottoms can be made with kind of a spike down with extreme kind of selling like this. But we do need to test this. I don't think we've done enough kind of testing. Let me show you where I think or how I think that's going to take place. First of all, I said this move wasn't going to be over until we saw pullback to end of trend on the 45-minute chart. 45-minute chart, and here's the signal, pullback to end of trend. That signal went off on Thursday morning, first thing. So beautiful little signal to show the low kind of down there. But we've come into cyclical resistance on this time frame, and I think we're going to test back down. And the reason for that is this kind of pattern on better momentum down here, where we get our exhaustion selling, which was 10 days ago. And then gradually, as we're kind of moving down through this move, I know the volume's been extreme, but in terms of selling volume, we've been putting in all these divergence patterns. And when I see these divergence patterns kind of line up like this, you normally get a final kind of thrust down, a flush signal type down to kind of clear out the last of the sellers in order to let the market rally, and you usually see a spike down. So I'm expecting that kind of Monday or Tuesday potentially. We've got this turn in here. If I go up the next two time frames, so from 45 to 81 minutes, we've got a pullback and a downtrend signal here again. So that's kind of another reason why we might get this kind of setting up now. If we don't quite make it this time, the next signal on the 135-minute chart will be a pullback and a downtrend. So if we don't roll over kind of on Monday, really first thing, then we might kind of push on up through 1200 and kind of roll on over a little bit later. If I look at better X trend, we're still in a downtrend under 1215, and we've got a lot of headroom here to kind of roll over and kind of get another kind of exhaustion selling down bar in order to trail the stop a little bit tighter. And the reason why I'm being a little bit cagey whether I think it happens kind of Monday, Tuesday is this. On the 40,500 tip bar chart, we've had our exhaustion buying, we've had a couple of bearish divergence patterns on Friday, and we're starting to roll over. But we're above cyclical resistance here on this time frame. We're coming up to support, so we could put in a little kind of pullback to end of trend up move to finish this trend off on this 40,500 tip bar chart. That's potentially, or we could just roll over. We'll know as soon as if we start on rolling over through 1153, kind of if we start on rolling over towards this and don't get held at this level, then I'd suggest that we're just going to keep on going for a little bit longer. If I go up one time frame to the 13,000, you can see on this time frame we've made end of trend, and we've just had a flush signal with Friday's activity bouncing between these kind of wide cyclical turns. So, and that's what we see. We see kind of end of trends propagating, starting in the lower time frames and pulling up. So we had it on the 4,500 tip bar chart. We kind of moved up to 13. So, does this signal the end of this move, or are we going to have that last little flip up? So about 1150 is kind of key. If we start breaking that quickly on Monday, I'd suggest we're kind of going down fast. But if not, we might be kind of just testing the highs up into these kind of 1200 type levels here before rolling over. So that's what I'm seeing on my charts at the moment. In terms of just other markets, I'll just roll through some charts, just make a couple of comments. We've had extreme selling, so this is crude oil. Extreme selling caught by the exhaustion. I mean, this is very similar to the equities pattern, basically, because on the daily time frame, we've been caught by cyclical support here, and we've got kind of extreme selling on better momentum like this. All these blue fractional bars kind of taking profits and kind of getting along kind of into these 75, 80 type region. But, you know, again, we need to see divergence patterns on better momentum before turning around and changing trend. So I'd suggest we're going to kind of test back down, float a little bit and kind of test back down and put in a divergence pattern there. Aussie dollar, you know, everything's looking, well, not everything, but things are looking very similar here. Daily cyclical support kind of come in, all these blue fractional bars, exhaustion selling. But again, before this thing kind of turns around proper, we need to see bullish divergence patterns, and that level's kind of critical. You know, if the market starts to, you know, selling, that we kind of keep on moving through these support levels, that will be significant. That means we're seeing, you know, this move in 2008 where we're moving down really fast. I think we're going to have a move back up and then kind of come down again. That's kind of on my hypothesis kind of chart. So, but you know, let's see these pullback levels kind of put in these I beg your pardon, test and divergence patterns on better momentum to kind of put in first before deciding, you know, whether we keep on you know, moving into a new uptrend. Gold is kind of, you know, has gone ballistic over the last few days. Somewhat to do with, you know, flight to safety. I mean, there's a little bit of kind of reason why people kind of move into golds, because of, you know, risk and worried about things. I think that's overstated, that argument. I really see this as an anti-dollar kind of move rather than anything. So, but interesting, up to 1800, what we've seen is exhaustion buying here. So we've got to see pullback to end a trend on gold, but I think we're going to, after these kind of extraordinary kind of bullish exhaustion buying signals, we've got to put in kind of bearish divergence, be pulling back to a after we've done that, so testing back up, putting in bearish divergence signals, and then kind of coming down to a pullback level. Silver, don't want to talk about silver because silver's, you know, similar to gold, except I think it's kind of made that pattern kind of earlier than gold, but that's the type of thing that we need to be seeing kind of coming on gold. Copper, you know, kind of rolled over, same thing. We found daily support here, extreme selling, bearish exhaustion selling signal, but we need to see a bullish divergence signals and testing back down on copper. Okay, euro. Now, euro is kind of interesting because I think, you know, I had a video, I think it was last weekend, just saying that I think the currencies are going to do nothing. The moves are going to be in the equities and kind of the risk-on type things, but the currencies are not going to do anything this time around. Because the currencies are not moving this time around, because there's not been a huge flood of money into the dollar index, that to me suggests that we're not getting this kind of repatriation of funds, you know, kind of end of the carry trade, people kind of being liquidated out of positions and having to cover margin in US and Japanese yen. So because we've not seen the move into the US dollar at this point, that suggests to me that we're not seeing kind of capitulation volume. Because the currencies, the euro dollar index, have basically stayed the same for the last month, I think this is just a technical move in the equities markets from which we'll bounce, and then we'll get the real move, and that's the real kind of scary thing where we're kind of worried about. I mean, everybody's talking about SocGen kind of going under, and, you know, problems in Europe that are systemic and whatever, but I think we'd have seen the move into currencies if that were actually the case. So until we see that, I don't think that's kind of systemic risk is on. And, you know, in the euro chart, I mean, euro's just stayed where it is. You know, given that, let's say, if we do have real systemic risk in Europe going on, surely there'd be a flood out of the euro. There's been a flood into Swiss franc, agreed, and into gold. But I think that's people just kind of panicking a little bit rather than it being kind of really systemic, catastrophic. So that's there. On the weekly chart of the euro, we're actually coming close in the next week or two to a cyclical support, which would be a pullback and an uptrend. So, you know, though I hate to say it, I actually think the euro is going to start to show signs of strength. And I'll show you the flip side on the dollar index when I show you that chart. So, and then, so here's dollar index. So, flip side kind of on dollar index, and you can see, again, same thing. We've just been stuck around this 74, 75 type level forever here. If I just flip up to the weekly chart, you can see here we're below cyclical support, and we're coming up to a cyclical turn in the next week or two, which will be a pullback and a downtrend. So that'll mean there'll be a kind of a swing down into dollar index, and I think that'll happen when we get a kind of final flush up into the equities market. So even though we've got these kind of bullish divergence signals, we've not seen extreme selling, we've not seen exhaustion selling on the downside, and so that's kind of going to come into play at some point. And then lastly, 30-year bonds. I mean, the bond contracts all look fairly similar, the 5, 10, and 30. Extreme kind of buying early on here, but on these we've actually started to see some divergence patterns kind of come in. So again, I think we're going to test down into equities, are going to get test up into bonds, and then if we do get a flip and everybody kind of moves into equities after the bottom might be in, then we'll start to see kind of bonds correct. So there we go, just some kind of big picture type thoughts, and again I think we're just going to find some weakness on Monday or Tuesday to kind of test the lows, and this 1150 type level, 1160 maybe type level is going to be key. If we kind of poke through here and continue on with a little bit of an up tick on something like the 40,500 tip bar chart, if we kind of this holds on Monday and we kind of move up, we'll get a final move into Tuesday with an end of trend probably, and then kind of correct down. But this could roll over on Monday as well, so two kind of scenarios to look for. Anyway, so there we go. I hope you're enjoying your weekend, and I'll just throw this video up on the site just without very much commentary, and good luck with your trading next week.